Well, hello everyone and welcome back to the channel. Of course, this is a very special weekend edition here for the markets because it is red across the board. Stocks, cryptos and commodities are what we'll be covering in today's video, and it was certainly a brutal Thursday and Friday with some of the biggest names getting sold off very heavily into what is going to be a massive week ahead. So let's talk about everything that's coming for the week ahead and why it's so important. See you soon. Welcome back everybody to our market weekend recaps here for stocks, crypto and commodities. If you like any of those markets, please remember to subscribe. And if you find value in today's video, remember to give us a thumbs up. Let's start by talking about the Friday risk-off sentiment on the markets. Markets rallied barely at the beginning. They got back to flat on things like the Nasdaq. They hit previous supports, which acted as resistance, and it was a sell the rip all the way into the close. And actually after the close, the market continued to fall. Was there a sector that was safe? The answer, not really. Obviously, we've been a little bit more bullish on things like jets recently and some of the defensives, utilities, staples, etc. But it was a sell-off across the board. And more importantly, it was a sell-off in one of the most favored markets that the stocks have seen over recent months, XME, metals and minerals. Why? I think they ran ahead of themselves. We're going into earnings season, and while the banks have done okay, the airlines have done okay so far, technology, a bit shaky, we'll talk about that soon. But really, the metals and minerals, they were coming into some of these earnings reports up 70 to 80% on the stocks. And that's maybe too much. And that's why so many of them are failing to meet the high expectations that the market has. Let's talk about the market's expectations leading into the week. And as you would be aware by now, and you should be aware, Apple, Alphabet, Microsoft, all these big ones are coming out with earnings reports. And we will be doing a special edition the day before the pre-open here on the Monday on this channel. So make sure to subscribe for that as well, because we have to talk about earnings in an entire dedicated video. It's just that important. Apple, yes, it's only down 8.9% for the year to date so far, at least from this date. But the S&P 500 is down about 10. So comparatively, it's been holding quite well. You can really see if the biggest stock in the world starts to fail, it's going to have a domino effect, and everything might even turn out like Meta Platforms. This is how bad things could be. And a lot of it's got to do with valuations. As we know, we're in an inflationary time. People in the US are scared, and people around the world are scared of what's in line for them. And here's some surveys of what people have actually been feeling out there in terms of the current inflation. So a recent survey that was taken about what is causing you the most financial stress over the last 12 months has been gas prices, then housing costs, obviously a big one, food costs. A big reason why so many people are investing into things like staples and stuff is because this is a bare necessity. And you'll notice that when you start to see these reports come through. Here's another one. Which of the following, if any, will you consider doing if higher prices persist? And what was the number one thing? Cutting back on dining out, cutting back on driving, again, oil, and then canceling vacations. We'll see about that. We'll have to figure out whether it happens. But of course, it wasn't number one priority. And you'll notice it keeps coming down. Now, none of them say, oh, I'm not going to buy food anymore. They're going to buy stuff, but they're obviously going through the list. Netflix not liking this one, cancel monthly subscription on the 4th in terms of the most likely. Another one is, which of the following, if any, have you already done in the past 6 months because of higher prices? And again, what is the first one? Cutting back on dining costs and cutting back on driving and canceling monthly subscriptions. These types of surveys help you to get a bit of a lie of the land. And as you know, you just have to ask yourself the question, what would your family, friends, and yourself cut back on first? And that usually becomes a sector that you don't necessarily want to hold if you believe there is going to be a continued failure in the economy from an inflation perspective. Let's talk about drawdowns, because as we know, we had the technology market really getting hammered over the last 2 weeks. And on top of that, we've had the S&P 500 coming back down as well due to earnings not being sufficient in certain markets at the same time. And this is where it gets a little bit scary. S&P 500 drawdowns from the 50 EMA. So we've long talked about the 50 EMA being a big one. And if we get back down under the lows that were formed in February and March, what's the next stop for the markets? Well, you'll see here statistically likely 85% of the time the market will go towards the 100 SMA. So we'll see where that is later on in today's video. Then we've got the 200 SMA, and that's a 52% reading underneath these zones. So again, this goes back through a lot of history. Thank you very much for Gary and the community for creating this for us. And it's awesome to see so many people coming together to bring stats and information that can help us as investors and traders in this market. Q1 earnings actually hasn't been that bad so far. Most of them are doing beat rates. We've got a 77% beats with 129 and 38 misses. We'll update this as we get more information throughout the next couple of weeks. And as we know, it's not so much about the news. And I think people are starting to wake up to that. The news or the excuse to why some markets sell off is always considered. And people say, oh, it moved for this reason and this reason and this reason. In general, that's not really the way the market works. The market just uses those as excuses, and the price action or the psychology of the market is really the lead to show you what the market is doing in general. What we do know is we're heading into the biggest earnings week that we've seen for some time. Q1 earnings, and we've got those big names like Apple, Microsoft, Alphabet, etc. coming out, Amazon as well. Those names are going to really completely change how this market trades. And I believe that, and I think a lot of people believe that out there. If they come in and the market decides, oh, it's a good report, we're going to go up, then you'll see it in the price. And of course, you'll see rallies. If the market goes against it, you'll also notice that. And then all of a sudden we go down to something like potentially the 100 SMA on the S&P 500, or even worse, the 200 SMA on the weekly. Let's talk about the VIX. The volatility index here just completely blew the water out. It's been going off that 20 again. 20, always a big problem here for the bulls and the bears. This is the normal place that you hope the VIX gets to. And it just rallied straight through, breaking past this peak. It's basically created a lightning bolt now towards the bull side. And if price does continue to go down, you'd expect the VIX to really start amping up here. Where is the VIX top? You'd think it's around 35 in terms of other previous resistances. But yeah, for now, it looks like fear is back in the streets, and puts were opened in big cases. The good news in some ways was that the US 2-year and 10-year both came down. 10-year now trading at 2.9, and the 2-year came down to 2.673. So it was as high as almost 8 during the session, and it came down to sell off a little bit. Now you'll notice the 2 years been on a very steady curve here, really bouncing off this 20 moving average on the daily. And I'm thinking if it can create a lightning bolt down, that's really going to be the signal that risk is back on in the markets. Until that happens, I'm not sure I'd be convinced, because we don't know exactly where inflation is going to stop. No one does. I mean, anyone that says they do is probably, the Fed or something like that, and they might be lying to us. They might say maybe or possibly, but also how's that transitional inflation going for them? That transitory didn't work out either. PCC is incredibly high here, so put call ratio just spiked to the same level as it was 24th of Jan. So they've certainly done a great job getting fear back into the market and huge amounts of puts back into the market. As we get readings over the weekend, as I said, we'll be doing a special pre-market edition to really recover these options, because this is going to be pivotal to how we understand what's going into these earnings big results coming in the next week. But PCC incredibly high here, moving back to some of the big readings that we've seen in the past, and certainly fear was in the street. DXY, big bounce here, risk off obviously, money flowing into the US dollar, new high here for the US dollar, and certainly a bullish looking chart at this stage. Huge rebound into just a mass amount of money flowing out of the markets. That put pressure on gold, and unfortunately the gold trade, where we were hoping that would get through something like a 1960, didn't happen. I tell you what though, if you did see that rally and it rallied through that bottom there, this is a very good setup. So just remember that type of setup. If you get the confirmation, and of course confirmation is key when it comes to technical analysis, this is the type of setup that you really, really like. It's got good base. If it broke through, it would have been fantastic. And at that point, you're looking at a very significant double bottom in the direction of trend. As it stands, horrible weekly close here for gold. It's back into the range. And I think, if anything, it looks more negative than positive at this stage. And part of the reason, it's going against the dollar index. If you've been trading gold versus other currencies, it's been okay. But gold, which we've been talking about, but gold versus the US dollar is a tough gig. You can see here the tweezer on the daily as well if it broke through 1960. I mean, it was a super trade if it got through. It didn't. Closes below. At this stage, 1920 seems like one of the levels that gold may move down to. And it's something to watch over the next week. Let's move over to oil. Oil actually holding pretty well at 101. This is US WTI. And basically, it's holding in a range-bound market at this stage. You can see the daily here doesn't really have any idea what it wants to do. We had the long leg doji, no closure above. We're still in that range unless we go above 104, which would be bullish, or we go below this kind of $99 area, which would be bearish. We're not too sure. One thing about oil is we're mostly been bearish on it after this happened, which was the euphoric move. After that, we rallied it up. We got that perfect. Thanks to you guys, the community. We did a very good job there. Then we got that rally that came through here. We hit the first take profit about 108. And at this point, it's looking, again, more difficult to read than it usually would be. Let's move over to Tesla. So Tesla's earnings has held it up, plus a huge amount of bullish positions being placed, no doubt, by retail traders. Look, it's holding really well, but I think Tesla and any of these stocks, even though it's got, relatively good earnings, it's all going to come down to the big tech stocks. So with Tesla, it gaps above, or it moves above, rallied heavily into 1,080, sold directly off that zone, which was the previous kind of support over here. And then it's back in this range. If it breaks below this point down here, this 975 this week, Tesla's going to be in for some pain as well, even with good earnings. Next stop would be 940, you would think. And then after that, it possibly could even go down to the 800s. You've got to be really, really careful here. And it all really depends on the Nasdaq and the S&P 500 and Apple more than anything else. Speaking of Apple, let's take a look at this one. I mean, you can see it here. Absolutely brutal sell-off here on that previous Thursday. There it is, big wick down, rejects, rallies a little bit in the morning, and then just goes bang, straight back down. So super unfortunate here for people that have been bullish Apple. New low, doesn't look very good. Any rally, you would think something back to a 164 could be met by sell demand, and that will push it back down to that 155 area. And could this happen before earnings? I mean, it's certainly possible. It really depends on what the rest of the big tech companies do, and we'll do a special video on all of those and the TA of all of them leading in. I'll tell you what, it's much more negative. You look at this on a weekly, you check it out, look at that big rejection candle, obviously the two rejections before, but it's just continuing to be sell the rip. And this week was almost so close to going bullish. The S&P 500, the Nasdaq, they were all so close. And then Wall Street came in at the perfect time just to punish everyone that went bullish on those back down. Nvidia, another one of the culprits. This one I've been talking about having a very high valuation on it for a while. The thing with Nvidia is it's through its trend line now. So we've basically broken through the 210, which was a huge level for it for so long. It's got through 200 as well. It's closed at 195. Is the next stop for Nvidia 155? That will be the big question. I think if the Nasdaq fails here and it goes down, this is the most likely scenario back into that consolidation that was forming through 2020 into 2021, and of course the famous split that had happened before after that period. Let's move over to IWM, another one that's looking really weak. People are going to look at this and now start to say, well, if this is Wyckoff distribution, which we all agreed it was, and this is, let's say, an SOS, are we actually heading down to 170? That becomes the picture. The picture that we had back over here in February and March, even with these rallies, suddenly starts to come, potentially to more fruition. And I think the IWM is pointing towards pushing down and putting pressure back on these previous lows, which are around 188. So small caps not looking so healthy either. False break up here, no green candles, just red candles, and then straight down. Very tough market to trade here, and it's all because of so much manipulation into the earnings. And we're not really exactly sure what Wall Street wants to do. I mean, the bond traders are saying the market's weak. Risk on, risk off is still saying, unfortunately, it's risk off at this stage. And it's all coming down to probably trying to push the Nasdaq into something like a support ahead of the big earnings. Here's the previous support caused in Feb, support caused in March, around that 13,050 level. Will we hit it on the Nasdaq? We're right about to hit it. and it's at 13,356 on the close. And after the close, we got 13,000, almost 300 as a reading. So yeah, some pretty brutal sell-offs here. Will we go to lead into this price, the support, ahead of the earnings? And then if the market wants to go bullish, that's where it's going to go. Remember, if we get under here, what becomes the next likely scenario? Well, the problem is it's often been pretty brutal. On the S&P 500, it's been often the daily. We saw that, the daily 100. On the Nasdaq, it can be much worse. So it can be all the way down here to the 200. Let's just quickly go over to the S&P 500. So what I'm saying is this, basically, we're under 4,400. We know that. That was huge. Let's go to the 1 hour chart. So it opens, the futures market was much lower at one point. So the futures market was already down at here during the Asian and London session. It rallied in, hit the base, which was that just under 4,400 previous support, sold directly off that and just continued to get pressured. Now, generally sell-off days or sell-off markets can only last really for 3 major kind of crippling days like this. You'll notice in most candles formations, you generally get 3, sometimes you'll get 4, but in general 3. And these aren't small, these are huge. So if we take the percentages here, this is a 3% switch, and then we've got another 3% switch. If we get another 3% switch, where are we going towards? Well, you'd think it's something like that support of 4150, 4200. We sell into that ahead of earnings. Let's just say that happens. Earnings then comes out. What is the decision going to be made? We don't know, but if Wall Street likes it, could be a terrible result and Wall Street still like it. We don't really know how that's going to look. That's the problem. How are they going to react? It's your guess is as good as mine on that one. So these are the questions that I think a lot of people will be asking, and we need to really break down that 4150 to 4200 as it happens. See the lightning bolt, see the double bottom, see those types of things. Notice where the options are. Again, we'll do it in the special video. This is all going to come into play when making better informed decisions if we hit this level. By closing under 4,300, we kind of sense that the market might want to do that. And at this stage, any bullish movement is going to be met by sell demand. That's what we've been saying since over here, really. And since over here, since that lightning bolt occurred, every buy has been a sell the rip, unfortunately. And until we manage to do a really good sequence, that is lightning bolt, double bottom, any of these things on the S&P 500, like some actual bullish supply, we're going to have problems with the bears. The bears are just going to keep pushing back. If it gets through, the weekly is the big problem. Underneath, we close under, let's say 4150. Where's the next logical conclusion? 4,000, which is the 100 SMA. And we saw that was an 85% likelihood once you get under this, especially the second time here during a midterm year. Often midterm years, as we know, they dip, they recover, they dip again to a new low, and then later on in the year, they recover, and they end up having really great stats into the next year. So unless you think there's a recession coming, which you may be right, we're not sure yet. At this stage, we don't have enough signals to say full recession, just mostly pullbacks. And yeah, this is where it's most likely going to go, especially if we get through here. 4,000 is the next big reading. And after that, the dreaded 200 SMA. And that would be all the way down at around probably a 3,600 by the time the market would catch up with SMA. Let's talk about Bitcoin and crypto. As we know, the halving event is one of the big things. I think crypto is really more stuck in what is Wall Street doing and whether there's risk on, risk off. I just bring this chart up so everyone can see between 900 and 1,000, that kind of last drop that occurred every other time. And we need to be aware of that potentially later on in the year, and also aware of the idea that there might be a rally leading into the next one. So remember, when everyone's fearful, everyone's scary, sometimes that's the best time to get a little bit more bullish on sentiment. Let's take a look at Bitcoin. Bitcoin really looking bad as well into the weekend. It's putting pressure back on the supports over here. You can see that big rejection that occurred. This was unfortunate because it had such a great setup into it. Great trend line, really good double bottom, couldn't hold a bullish candle at all. We had a long leg doji. I mean, imagine if we closed a bullish here, 45K would have been the next zone for it. Most likely statistically, I mean, that becomes very, very, very good zone to look at. So Bitcoin struggling here. It's sitting on the support at the time of this recording, leading into the weekend. And depending on what they want to do with it, it's going to try to bounce here, but it is looking a little bit weak. Bitcoin shorts, the whales are back, starting to play shorts again. New peak from here will probably coincide with shorting of Bitcoin. So keep watching BTC shorts. It's really important. Ethereum versus US. Yeah, it's right on the support as well. You can see the long leg doji that was just formed on the daily here. Big rejection candle. It's holding up very well considering what the stock market did. So maybe there are still some believers here trying to buy it up, but it is on critical that it holds these zones. And at this stage, if you're looking at it, I tell you what, those candles don't exactly make you feel great about the world. Even the 2 hour doesn't look fantastic yet. If you haven't already, follow us over on Twitter. We're almost at 5,000 followers, thanks to you guys. So come and follow us at FX Evolution. And the week ahead information, it's really just all earnings. I mean, there's a bit of stuff. There's core PCE price index on Friday, April the 29th. But in general, it's all about earnings this week. We will have a special video covering earnings before the pre-market on my Monday, your Sunday in the US. So just remember that's coming out, and that's going to be a great video. We'll go through each of the big stocks. We'll go through the technical analysis, and I hope you guys enjoy it. If you do, please let me know in the comments down below. Good luck out there. It's been a tough market. And remember, if you're unsure on what's going on, sometimes it's better to actually wait for the market to make the decision. And when you see the decision made on the charts, then you can lead into that price and follow for that participation. And sometimes that's the best trade. Waiting is not necessarily not a trade. It's actually a trade in itself. Being patient, disciplined, and hopefully having some kind of plan around your take profit, stop loss, and everything else. Or if you're an investor, having, of course, the ability to believe in your company. Thanks so much. See you for now. Bye.